Let's move on to when you can actually claim a deduction. The key word here is incurred. You can only claim a deduction for an expense when it is incurred, but there is no definition of incurred in the tax legislation. This could potentially cause an issue, especially if you have expenses that straddle an income year. Like, how do you know what tax year to claim the deduction? So, very broadly, ATO considers expense is incurred once you have a presently existing legal obligation to pay that expense. Like you owe someone that money and you cannot escape it. So, when you receive an invoice, for example. Interest expense are also typically deductible when incurred in relation to the month that you start to owe that interest, instead of when you actually pay it. In practice, this means that you can incur an expense and so you can claim a deduction for it without having to actually pay for that expense. And this goes for businesses using either the accruals or the cash basis. Let's go through an example. This is Fiona, and she's a chartered accountant. She's a sole trader, and she reports her income on a cash basis. In June 2021, Fiona gets an invoice for telephone expenses, and she pays that invoice in July 21. Although Fiona paid the invoice in July, which is the 2022 income year, she actually incurred the expense in June, which is the 2021 income year. And so she can claim the expense in the 2021 income year. Specific deductions, though, are a little bit different. They each have their own timing rules when an expense can be claimed. So it's best to read up on the relevant provision to know exactly when the deduction is available. Repairs, for example, are deductible when incurred, but expenses like borrowing fees and loan establishment fees are often spread over the term or the period of the loan.